Okay, let's now look at the other side of the balance sheet, the liabilities side, and talk about that. Okay, talk about the words relating to that. Okay, so let's have a look at a file together. This one. Okay, so now we have the liabilities side of the balance sheet. Okay, and once more, we divide it into two parts. We have current liabilities and non-current liabilities. Okay, and again, if somebody said, what's the definition of those? Well, we could say current liabilities are those liabilities which will be settled within 1 year, which is settlement usually means payment. Okay. Right? And non-current liabilities are anything which does not satisfy the definition of current. Okay, so let's take our first current liability there, which is accounts payable. Accounts payable. So what are accounts payable? Accounts payable are where a business has received goods or services on credit and has not yet paid for them. So that's accounts payable. Okay, now as another example of current assets, we have short-term borrowings. Okay, so perhaps bank loans, for example. Okay, and then another example of a current liability, taxes payable. Okay, usually taxes are payable within 1 year, so they're current liabilities. Okay, so taxes payable or tax liability, perhaps we could call it. Okay, another one. Again, we might have to cover other liabilities which are current, a category called other current liabilities. Okay, and then normally we would have a subtotal, which is called total current liabilities. Okay, and then we move on to non-current liabilities. So in other words, liabilities where the settlement period will be more than 1 year. And here we've got an example of long-term borrowings. Okay, long-term borrowings. And notice that this might also be bank loans. It might be even the same bank loan which is mentioned in short-term borrowings. Because remember what we have to do. We have to, if we have a bank loan, we have to split it perhaps into two parts. The part which is repayable within 1 year, so that part goes into short-term borrowings, and the part which is repayable after more than 1 year, long-term borrowings. Okay, and again, we would have a subtotal, total non-current liabilities. Okay, and then the total liabilities, another total there. Okay, now let's also cover the third part of the balance sheet, which is equity. Okay, equity. And in most small to medium companies, there's usually only two kinds of equity. Okay, one of them is share capital. Okay, share capital. And that is the amounts received by the business when it issued shares and they were bought by new shareholders. Okay, or new shares anyway were issued. Okay, and the other item of equity we have is retained earnings. Retained earnings, and that is the total of all the profits and losses since the business was incorporated, which have been kept within the company. And as I say, in most small to medium companies, that's the only two types of equity there are. And then we'd have a total for equity and of course, a total for liabilities and equity, which, if we have done everything correctly, will be the same as the total for assets. Because, of course, that's the accounting equation. Assets equals liabilities plus equity. Okay, the accounting equation. Assets equals liabilities plus equity. Okay, let's stop this video here.